Excellent. So today's session is all about navigating tax season. This is meant to be like a tax prep checklist for you, and we're going to go over a lot of information. So I'm going to pass it over to our facilitator, Alicia, so she can get started.
Good morning, everyone. The topic is the Small Business Owners Tax Prep Checklist. This is not exhaustive, so there may be some additional information that you as a business owner may know that is additional, and that's very helpful. But we're just going over some very basic things, and if you have any questions at the end, I'd be happy to answer them. If I can't answer them now, I have my email, we'll have it posted, so you can send me anything and I can do research and get back to you. So I don't know everything for sure. My name is Alicia Hart. I've been married to my husband for over 22 years. We have 3 children together. Just a little bit about my experience. I've been a sole proprietor. I've dealt with bookkeeping, payroll. I work for a tax service, so I prepare taxes and I provide business consultations, advice. I've been doing that for 16 years. So I handle all types of tax returns, whether it's a small business, partnership, corporation, and I even handle nonprofit organizations. I always try to keep busy, so many of the hobbies that I've turned into income earning opportunities via self-employment, whether I wanted them to or not. My first experience with self-employment was really discouraging, and hopefully going over some of these things may help you. I had no idea how to keep track of my expenses or what I could keep track for expenses, and I found that when I did my taxes, my preparer said I owed money, and I was devastated because I just didn't think that I had made very much money. So hopefully some of this will help. If anybody has any questions. What the agenda for the first part of the meeting is discussing what documents you need to have in order to properly file your tax returns, filing deadlines that you should be aware of as a business owner, and we have a provision of selective resources that can help you do your own taxes if you choose to. And then sometimes it gets to be a little bit much, so when to hire a pro and what to expect in that service. Then at the very end, we'll be reviewing the One Big Beautiful Bill Act. We affectionately call it OB3 just because it's shorter. So, and then we'll do the Q&A. So some of the common forms that you will see when you are self-employed as a business owner, these forms may be something that you have to prepare yourself or you get sent these documents. There's a 1099 NEC that came out in 2020. And basically what it did is it divided the 1099 miscellaneous and it separated out the non-employee compensation portion. So the 1099 NEC is something you would use if you were a business owner and you're sending it to someone else that did subcontract or contractor work for you, provided you a service or labor. The 1099 miscellaneous got switched to eliminate that, but it still covers a fair amount of things like rents, royalties, spiffs, awards. If you work for a company that gives you a $5,000 like product line, if you earn something like that, that may come on the 1099 miscellaneous. We also have a 1099K, and that's given to a lot of gig workers now because they process payments through Square, Venmo, Airbnb. Any of the payment processors for credit card companies will send you one of these, but you do have there's a limit, a legal limit of $20,000 and 200 transactions. So usually it only hits a certain type of business. You have to hit both of those ceilings for it to kick the 1099K. However, if you do search in your company that you have a merchant services with, some companies just automatically do it. So just keep an eye out for that. Also, a 1099-S is something that you may be familiar with, and that is usually for sale of land or real estate property. Some additional forms that you'll see and need to have if you are having people work for you, whether it's a contractor or an employee, is the W-9 is for a contractor. That's to be able to receive their EIN or their social security number. And that should be given to anyone who, before they provide work services to you, because What happens if you don't get that before? Sometimes they won't fill it out or they won't give you the information. And if you pay them more than $600 and you don't have that information, you're not allowed to deduct that on your return. So it's very important. Same thing with the W-4 and the I-9. It's extremely important to know when to do those forms. The deadline for completing the I-9s is the first day of employment for Section 1. Section 2 on the I-9 must be completed within 3 business days after the employee's first day of work. So 3 days in of working, that needs to be completed. So, or they're not supposed to work. The updated I-9 has an addition date of January 20th of 2025, but that will be valid until May 31 of 2027. So if you go to print one off and you're like, well, there's no 2026, that's why. Failure to comply with these deadlines can result in significant penalties for employers. So if your 1099s aren't done, it can be up to like $60 per return. And it can be up to $60 per person. So that's something you want to keep track of because IRS has been known to give you a penalty for not filing. Some additional information that you may need regarding your business and doing your taxes, you'll need a profit and loss. And we'll go over a little bit of how to create that. If you're a partnership or corporation, you'll also need your balance sheet details at the end of the fiscal year. That helps the tax preparer, or if you're preparing your own, it helps you be able to balance out your income and revenue along with all of your depreciation. Some of the other questions that we could ask ourselves that would affect our business: do you have health insurance through the marketplace or private insurance? As a business owner, you're allowed to deduct self-employed health insurance deduction on the amounts that you pay out for premiums for health insurance. So do you know how to do that? Or, have you done that before? Or were you even aware of that? Another additional that will help lower your tax liabilities if you contribute to a retirement account. So contacting someone who handles that, like a financial advisor or planner, they may be able to help you with that. There's multiple retirement accounts that you can use that alters what you can put in, so your tax deduction can be most beneficial for you. So talking to a financial advisor is a great idea to do that because they know all of the parameters of what accounts would be service you best for your business. One of the things that you also can do along with the health insurance, if you have a high deductible health plan, do you have an HSA? Do you contribute to one or do you get distributions from an HSA? The contribution will help lower your taxable income. So that's something that you should be aware of, along with the distributions of an HSA. If you take money out, you do need to report it on your return, or IRS can penalize you 20% off of the distribution. And then you have to file a return to show that you did use it for unreimbursed medical expenses versus a tank of gas or something. Another question is, did you use your vehicle for business? Sometimes people forget or they don't quite know how to incorporate that because maybe they personally own the vehicle, but you have a lot of options with vehicles. And do you have a mileage log or a way to keep track of that? That's important because IRS requires us to have a record to prove our expenses. Talking about a profit and loss and then a balance sheet, these are just some samples of how some of them may be put up. A lot of software companies, it looks very similar, but there's you can choose a lot of different options to show. So your profit and loss shows all of your revenue streams of income, and that shows all of your expenses, such as wages, insurance, your depreciation, your office supplies, things that you purchase throughout the year. And then the balance sheet shows your income at the end of the year that's in the account. So like your cash accounts, checking, savings, if you have any CDs or things like that that are in a bank or something like that, those are where those would show up. And then if you look at the bottom, it says less current liabilities. Those would be like loans or things like that, that you have money that is sitting to go out. If you have any questions about how to do a profit and loss or to do a balance sheet, I'd be happy to answer them at any point. So talking about filing deadlines, W-2s and 1099s this year need to be mailed out by Monday, February 2nd. They have to be at the post office and stamped by the end of the day. January 31st is usually the date, but this year it's a Saturday. So if it's a Saturday or Sunday or a holiday, IRS goes to the best next business work day. So that puts it to Monday. As corporations and partnerships, the filing deadline is March 16th because March 15th is on a Sunday. Typically it's March 15th. That would be for, again, S corps and partnerships. And then swinging over to our personal returns, our individual returns, including sole proprietors, and C corporations actually as well have a filing deadline of April 15th. Again, unless it's a Sunday or a holiday. If a taxpayer resides in a federally declared disaster area, they also have additional time to file. And it depends on the disaster. Usually it's a period of like, it could be 60 days, it could be 90 days. It just depends on whatever they pass. One of the things that we as business owners have to look at is, okay, we have to pay taxes. We know we have to pay taxes. What is the best way to do that? Do I do it now? Do I do it later? And we're going to touch on that a little bit. But if you want to do estimated payments, the dates for those, it's a little bit odd because like April 15th is right after the first quarter. June and September 15th are like the last month of the second and third quarter. And then January 15th is after the quarter. So the June 15th and the September 15th, a lot of people get that confused. But that's the dates for 2025. And again, 2026 estimated payments still fall along those April, June, September, and January 15th. The January always is for you have to make sure that you put it for the previous year because sometimes they'll take it for the current. Estimated payments, do I need to make them? Sometimes sitting down and doing your profit and loss will help you to do this if you are a new business, especially. What you're required to do to avoid a penalty for not paying enough in is if you owe less than $1,000 in tax after you take out any credits or withholding, then usually you don't get any penalties. They waive all of those. Or if you pay at least 90% of the tax for the current year or 100% of the tax for the prior year, and they allow you to do whichever is smaller. So if you know that you're going to pay in, this should help you give you a guideline of how much you should pay in so that you can avoid any unnecessary penalties. This year, if some of you haven't received any information from IRS, I'm sure you've seen it around. You may have gotten a letter if you're making payments. IRS has announced that they'll phase out paper tax refund checks for individual taxpayers, and they did an executive order for September 30th as the deadline. Refunds from IRS will typically be issued via direct deposit or other secure digital methods. And there are alternatives that are set up that they're unbanked individuals. Taxpayers are encouraged to review and update their banking information ahead of time with IRS. I suggest creating an account for taxpayers at irs.gov for IRS. The key date and implementation for all of those the executive order has all passed. So even the deadline for the filing the tax return for last year, October 15th was the cutoff for your individual returns. September was for the S corps and partnerships. But those deadlines are effective and they're still keeping it. Sometimes they appeal it, but they're pretty solid on accepting digital payment now and sending out digital payment. Who must comply to this order? The executive order applies broadly to payments involving federal agencies. So tax payments and refunds, fees, fines, loans, disbursements. And it brings out the point that while the mandate covers a wide range of payments, it applies to where electronic transactions are allowed by law. So if you're in a position where the government does not allow you to do it, maybe because of a high dollar amount, et cetera, then you follow the guidelines for that. There are exceptions to the rule. Even though they're doing a big push for it, individuals without access to banking or digital payment services, they're allowed to not have to send those in that way. They have not yet come out with like an actual waiver to sign, but that may be on the docket to do that so that they know that that individual can't for whatever reason. If there's an emergency situation where electronic payments would create an undue hardship, not really sure what that would be, but they take it by a case-by-case basis. Also, national security or law enforcement scenarios where non-electronic transactions are necessary. So I would assume some of those things we're tracking, they don't want things tracked. Maybe they would take it differently. Other cases at the Treasury Secretary's discretion. So like again, on a case-by-case basis, you can appeal to IRS. Things that taxpayers should do now to help themselves with this: collecting your bank account details, logging into IRS, creating an account, putting those details into that secure account would be helpful. There are already options for making electronic payments via IRS. There's a direct pay system where you can do it directly from your bank account. They have the EFTPS payment system for business and individuals, and that includes scheduling payments out. So the EFTPS, a lot of people use that for their 941s, their payroll and regular payments. IRS online account: when you create an online account, you can view your balances and make payments, and they'll update that as your payments come in to your new balances. There is a debit and credit card exception, not an exception, but a process for debit and credit cards available through IRS. You log in IRS and then it takes you to those approved processor payments. There are fees that apply. It's not may apply, they do apply. Most of them are a minimum of $2.50, but I processed one the other day and it was $2.10 for whatever reason. ACH transfers or wire transfers, they do accept those for certain high dollar transactions. That's not every payment. You can't send it that way, but if you have a large amount, we're talking like tens of thousands of dollars. And then to learn more about payment options, recommendation is just go to irs.gov. There's a tab that says payments, click on that, and then that'll bring you up all of your options along with your install agreements, things like that. So available resources for you as a business owner: I highly recommend you create an account with IRS, and that is to make sure that you're in line with the digital banking, that you can review your tax returns. This allows you to be able to see any account transcripts. You also can see wage and income transcripts that come through that. So it's a way to be very visually informed of your tax situation. Many of us hate using a mileage log. It's a pain in the butt. You have to write it every time you get in the vehicle. It's distracting. Sometimes you have to go back in your calendar and look and where did I go that day and all of that. It can get frustrating. We definitely encourage you to find something that works for you. So if the paper book works for you, great. But most of our clients, we recommend Mile IQ app, and most of them have it. It starts off and it's free. You do have options to pay to have more features, but it keeps track of you GPS wise. So you get in the vehicle, you start it, you do the driving for the day. And then at the end of the day, when you close out, it'll ask you if it's personal or business. And it is recommended that you keep track of your personal and business use, especially if you're using a business vehicle, because of the fact that IRS wants to know how many miles you put on, how many business miles you put on. They want both. So that's a way to do it, and it's pretty easy because most of us carry our phones. I know that I'm attached to mine. If I didn't have my phone on me, I would be completely lost because it has my calendar and everything in it. Some of the things that you want to think about as a business owner: are you looking to do your own bookkeeping? Are you satisfied with what you have now? I recommend that if you're a business and you're a legitimate business and you want it to be a legitimate business, spend a little money and find a bookkeeping program. There are options that are extremely cheap. QuickBooks is not one of those options, but it's the most common. So QuickBooks is great, especially if you're a bookkeeper or you do payroll and you have multiple companies that you're doing that for. As far as like QuickBooks Online business owners, that's not a bad program. Another one is Xero. It's Xero. That one, there's a small payment for that a month to use that. Then there's FreshBooks, which a few of my clients have and they love it. And then we have Wave Accounting, and Wave Accounting starts off free. So all of those have plans usually that you can pay for, and it goes according to what you need to have done. So if you're like billing out invoicing or if you're doing payroll, things like that. The reason we recommend a real software is because Excel or Google Sheets, while they're phenomenal and lovely for tracking, it's very easy to hit a couple of buttons and delete a formula or skip a number or delete a number by accident. Once you have a bookkeeping software and you put an expense or a revenue into that software, it stays and you literally have to choose to delete it. So it's has a safety feature for that. Plus, those software programs also print out your profit and loss and they print out a balance sheet for you, whereas an Excel ledger or Google Sheets does not do that for you. If you need to give out 1099s, you need to fill out the W-9 again to make sure that you can provide that to the contractor that works for you. If you don't want to use your social security number, you can have an EIN created if you already have a business. A lot of people already have an EIN. But you get one at irs.gov, and weirdly, they only do it during business hours during the day. So it's like an odd time. It's like 7 or 8 in the morning till like 5 or 6 in the evening. And if you try to do it on the weekend, it's not open. Going to do your taxes, to do or not to do? That's the question. Well, we all have to do it. So we have to file our taxes, but will we want to do it personally or do we want to hire a tax professional? What are some of the factors that we would use to determine that? Well, I think everyone would agree that time is our most valuable asset in life. So do we have the time not only to prepare the tax return, but the desire and capabilities and time to be able to do the research and read the instructions and publications to make sure that we're properly filing a tax return legally and most beneficial to your tax liability. So that's something to consider. It is a lot of research. There's a lot around like rental properties. There's a lot around depreciation. So there's a lot to be aware of. Please do not trust AI, Google, or your friends to answer your tax questions unless your friends have the background to answer that. It is extremely confusing to get, especially with AI, you can get quotes from someone writing a paper and the paper's online. So just be careful about where you get the information. And if you have tax questions, you should either ask someone that's a tax professional or do the research on IRS or Maine Revenue, wherever it needs to be done. We want to make sure that our return is done correctly and that we've gotten every deduction that's legally allowed to us. So that's another consideration. Do we know the law enough to be able to do that? The other question that you want to ask yourself is, do you want some assistance year-round? Do you want some help with anything? Say you get an IRS letter and they just want information. Do you feel comfortable handling that? Other things to consider as a business owner and thinking about having a tax professional. Are you taking qualified business income deduction? Do you know how to figure it out? Do you understand it? The other question is health insurance. We talked a little bit about that, but there's a self-employment health insurance deduction. Do you know how to give yourself the deduction and how much to give yourself for the deduction? Are you taking home office expenses? Should you be taking them? Are you allowed to take them in the entity that you file a tax return? This is a very scary fact, and just to be aware, in order to prepare taxes for people, you have to have a PTIN from IRS. And there is no education, no experience needed to do that. So you just file online with irs.gov, you get a PTIN, and then you're good to go. So please be careful. Make sure you ask the questions of your preparer, and your preparer should expect a new person that's coming into their business. They should expect questions like we've discussed, because we want to make sure that the person handling our finances does it appropriately. Personal things that may be factors for you choosing a tax professional. Do they care about you? Is there engagement in that with the questions that you're talking with them? Is that important to you? Did that person receive ongoing education? Are they available? Are they open year round? Is there someone you can talk to? Are there additional services that your business may need, such as payroll or bookkeeping? Do they handle that? Is there something that they network with something to be able to help your business grow? The other factor is, how is their fee structured? Do you have to pay every time you contact them? Does a phone call trigger a payment? That's something that you need to consider. How is your tax professional viewed in their community? Have they been around for a while? And then also your friends, your family, fellow business owners, ask them who they recommend, why they recommend them, how do they feel about their tax professional. And there's no shame in having someone do something for you. I know, especially living in Maine, a lot of times we have the feeling like we're self-sufficient. And while that's lovely, sometimes our time is better spent elsewhere making money as opposed to filing a tax return. So just think about it in the aspect of you as a business owner. These are some of the common forms that we went over. This 1040S is a link to 2024, but there is the estimated payments I can send you another link for the 25s, but we're already through 25s, and the 26s aren't even out yet. So they'll come out typically like February for 26. These are some resources, and if you want these shared with you, be happy to send you the slideshow. I know that Rachel's recording everything, but there is a checklist for starting a business that irs.gov gives out. We have at H&R Block, we have a comprehensive tax prep documents checklist. There is from bench.co, there's 8 business bookkeeping software options for small businesses, how to apply for an EIN, how to set up an IRS account, choosing a tax pro. Then there's 3 reviews on tax software. And then Block Advisor Solutions is something that handles bookkeeping payroll services as well as entity formation. So that's something we all need assistance. And that's also something that I do help with that. So if you have questions, I'd be happy to answer them for you. Resources continued. Publication 334, if you're a small business owner that uses like a Schedule C, that's perfect for you. Why and how to make estimated payments. Why should I do my own taxes? When to hire a pro. Tips that help you choose a tax pro. And then the last link there is finsend.gov. That's about the beneficial ownership information report. We were required to do that for a hot minute, and then they repealed it. So many businesses had filed, and it's okay if you've already filed for it, it'll just stay there. It's just letting them know. The reason it was done was to help prevent money laundering or tax fraud. So we're going to switch over and answer some questions about One Big Beautiful Bill Act, the OB3 is I'll be calling it. This will hopefully answer like the main questions. This bill was signed into law on July 4th of 2025, and it does bring significant changes to our current tax situation. There are many provisions from the TCJA, the 2017 Tax Cuts and Jobs Act. It made it permanent. And there are some new rules that do affect individual people, families, and businesses starting in 2025, and then it goes further out. Some of them are set to expire in 2028, but some of them do not have a quote unquote deadline. The agenda for the OB3 is we're going to discuss what's in the bill, when it will go into effect, how does it affect the taxes, should it even matter to you? How does the OB3 affect the standard deduction? Which tax credits or deductions are being eliminated? Are personal exemptions coming back? And how might I plan for this? What's in the bill? So the TCJA Act, with the OB3, they made it permanent, but they also added a few things. So some of those things are new tax benefits for qualified tips, overtime are not taxable, and we'll go over the parameters for that. There's an additional deduction for seniors and a deduction for qualifying new car loan interest. When does the OB3 go into effect? Again, many of those are starting in 2025. Some provisions that are included in 25 are increased child tax credit, the increase in the 1099K threshold back to the $20,200, the deductions for tips and overtime, and eliminating the credit for electric vehicles, and eliminating the credit for energy efficient home improvements. So they got rid of some of those at the end of 25. How does it affect our taxes? Well, the TCJA tax brackets were 7 brackets, so they had increased the brackets. Those brackets are staying, and the taxable income is going to be based off of what it has been. They didn't adjust the actual tax charts. They did include new inflation rate changes to the tax brackets, and like for standard deductions for like your filing status. Should it matter to you? Yes, it should. Reason being is because most of us are affected by the tax brackets. If we follow and do our taxes with our business, we definitely have taxes due, so that does affect us. Also, if we are paid overtime or tips, or we pay overtime and tips, that's something that it has to be kept track of. 2025, on the tips, it is loose, and it's just basically based off of like a report that you would get from your employer. And 2026 requires that to be put on the tax return, not on the tax return, but on your W-2, so your tax document. You should also be very aware of what your withholdings or your estimated payments are to make sure that you're adjusting for any of the tax provisions that affect you. You may be in a position where your income is lowered or increased, so those provisions would change how you decide what you pay in. How does the OB3 affect the standard deduction? So in 2025, that means that the single or married filing separately deduction is $15,750. The head of household is $23,625, and then the married filing jointly or qualifying surviving spouse is $31,500. So that did go up from 2024, and it will go up again in 2026, as you can see. $16,000 for single or married filing separately, $24,150 for head of household, and then $32,200 for married filing jointly or qualifying surviving spouse. So that's a benefit for us. We kind of bank on it every year because it pretty much happens every single year. So we're like, ooh, maybe a few more dollars. But a lot of times when that happens, they also adjust the tax chart so it doesn't equate as great as we wish. Which tax credits are being eliminated? So many of them have already expired. So like the new and used electric vehicle credits after September 30th, none of them are allowed. Residential energy credits, windows, doors, heat pumps, anything after 2025, it's done. At the moment, you do have until December 31st of 2025 to buy and install to get the credit. So you've got less than 2 weeks, basically. Solar credits remaining will carry over to later years. Solar was one of the ones that is a refundable credit, and right now they're keeping it. Usually carryovers to later years stays. They don't usually shut them off. So you won't be able to buy any new items for the solar credit after 2025, but if you have any credits that you've used to pay your taxes and you had an amount remaining, you can carry that over until it's completely done. The alternative fuel refueling credit after June 30th of 2026, that will disappear. It's not refundable, there's no carryover, it's just done. This means that you have to be quick if you want to do any of these energy credits and you want to take advantage of those on your tax. You have until the deadline of the end of the year. So the qualifying vehicle for a credit there, that's gone. So unfortunately, that's already done. Are personal exemptions coming back? No, personal independent exemptions are permanently eliminated under the OB3, with the exception for certain seniors that are 65 and older. So you may have seen some of the things under the OB3 for seniors that will benefit them, and those will take over instead of any other personal exemptions. So for workers under the Act, there's 2 major new deductions that are available. So no tax on overtime, I'm sure you've heard, and no tax on tips. The deduction for overtime pay is up to $12,500 for single, $25,000 for married filing jointly. Deductions for tips is up to $25,000, and that's per return. So as your income increases, if you have a higher income, those deductions will be limited. They will be adjusted as the income goes up, and then it will cap, and those deductions will be removed after a certain amount of income. Overtime is taxable in most cases, but for tax years 2025 and through 2028, taxpayers can deduct that amount that we discussed, the 12,500 or 25,000 for joint filers. We're going to go over how to explain that and how to figure it, because it's not, if you work 44 hours, 4 hours of overtime is not non-taxable. So we'll explain that out. So I also had it on another page, but the overtime deduction is related to the half portion. So if someone is paid $18 an hour and then they're $27.50 on the overtime, it's the extra $9 that's of that overtime portion that's not deductible. So their standard hourly rate of $18, they still have to claim tax on that. The rule impacts taxpayers in the highest bracket under the cap. Their itemized deductions are limited to the tax benefit, and it equals to about 35 cents on the dollar that they deduct. So again, income limits, and that's with most credits and deductions. Many of them have income limitations. As far as education and student loans, that's another thing under the OB3. Student loans forgiven to death or disability will continue to be tax-free. The requirement there is that they have to have a social security number to claim the exclusion. Additionally, the Act extends the employee exclusion for employer payments. It's like $5,250. The exclusion will be adjusted beginning in 2026, and that will be adjusted according to inflation. There are changes to education-related tax benefits. The distribution from a 529 plan can be used for a wider range of expenses. So any plan that you have on their website, wherever you're holding that 529 plan, they should be able to give you a whole list of expenses that qualify for that. Employer student loan repayment benefits are now permanent. Again, that's that $5,250 that they would receive from the employer. That's not taxable. The Social Security number is a requirement starting in 2026 for the American Opportunity Credit and a Lifetime Learning Credit. So if you have a child that does not have a Social Security number, I don't know how they would get in school, but that you have to have that social security number in order to obtain the credit on your tax return. And if you get because of the education and the lifetime learning credit, it has to be claimed in the year that you are in school. If you got your social, say they got their social in 2027, but you want to claim it for 2026, you cannot, because it goes based off of when the social security number is issued. For seniors, this is for anyone that's 65 and older. You can get a deduction up to $6,000 for each qualifying taxpayer, and that will be available from 25 through 2028. The deduction does begin to decrease at higher incomes. And then finally, they also have to have a social security number to claim that deduction. So if you have two seniors on one tax return, they also get the deduction for their age as they have in the past, plus the $6,000 deduction. So if you have two individuals that are 65 and over, that could be quite the savings. So they could have up to $12,000 deduction. Seniors will receive the deduction regardless of taking a standard deduction or itemizing. So it does not make any difference which way that they file. That's completely an additional amount. What is the impact for children and families regarding the OB3? Well, the child tax credit is adjusted to $2,200 permanently and will be adjusted each year beginning in 2026. We should see a rise in that. It may not be a lot, $100, $50, somewhere along there typically. The other dependent credit is $500, that's now permanent. So the child tax credit covers from birth to through the age of 16. When they turn 17, IRS considers them an other dependent. They're no longer considered a child, even though you're legally allowed to claim them through the age of 18, and we recommend it. The other dependent credit kicks in at 17, so it's $500 instead of the $2,200. The percentages of eligible expenses for child dependent care credit in 26 is expanded, and higher income families may claim the credit. So if someone has income increased or they have not been able to use that daycare dependent credit in the past, they should really take a look to see if they qualify, because they may be able to qualify because it was the cap was raised. Beginning in 2025, I don't know if you remember back a few years, there was adoption credit that was refundable and people got a bunch of money for it. They did do the adoption credit for up to $5,000 and they've made it refundable. The remainder of the credit is non-refundable. So the maximum credit for 2025 is $17,280. That amount goes up every year. So that goes along with inflation, and that's usually raised up, a little bit each year. The $5,000 of the adoption credit, if you don't use all of the $5,000, that does roll over with the remaining of the non-refundable, but it doesn't remain refundable. So something new that actually is going live today on their website is the Trump accounts at trumpaccounts.gov. So what is this? Well, it's a tax deferred savings account for children under the age of 18. Parents can contribute up to $5,000 a year to this, and babies born from 2025 to 2028 will receive an automatic $1,000 federal contribution unless you opt out of that. There will be further guidance coming in the impending month over the next few months to help clarify how people can take advantage of the accounts for their children. But the trumpaccounts.gov webpage is open, and they have a spot where you can put in your email address so that they can send you updates on that. I was on the website, I didn't get a chance to check it today, but it said that it should load more information starting today. So we'll see what comes with that. But that's a huge benefit. I mean, $1,000 to put into your baby's account is huge. Vehicles, regarding the vehicles, so the electric vehicles that we had been getting deductions for that were made in the US, again, that's expired, unfortunately. They did change Another benefit to buying new vehicles, the final assembly still has to be in the United States, and you do have to provide your VIN to claim the deduction, but you can deduct interest on new car loans. So if you get a new car, and it has to be a new car, but if you get a new car and you have it with a loan, the interest on the loan is deductible to you. So that's something that you would want to make sure you have is the VIN for the vehicle in order to do that on your tax return. These are some additional resources, talks about payments, the provisions from the OB3. There is a tax calendar for deadlines, the link for the Trump accounts, information regarding the student loans and how the process for that, along with guidance on tips and overtime. All right, so the next, sorry about that. So we have a few minutes if you have any questions. And like I said, I do not know everything. So I may have to research if it's something that's extensive. I do have, that's my email and that's the phone number to my office. So if you get a question or have a question later on, I'd be happy to answer anything for that. Thank you very much.
Thank you so much. Yeah, a lot of information, I know. So if you have questions, we would love to take them now. And if it's overwhelming, please feel free to email a question in. But a question did come in the chat. So talking about tracking mileage.
Sure.
So do you need to track the starting mileage? Like, are you meant to track, I started my day at this mileage and I ended my day at a different number of mileage? Like, do you need to be so specific? Or is it just kind of total mileage driven? Like, do you have to keep track of the specific numbers?
IRS won't say no to you tracking it that way. They would love it. But is it required? No. You do
Okay.
have to track the amount of actual miles that are covered. And one of the things that often gets forgotten, IRS can audit you for it, but I've rarely seen it audited. They want your personal and your business miles. They just want to know how many miles you've driven for the year and how much the portion of that is for business. And for your preparer, it helps your preparer because that helps them determine if the standard mileage rate is better or if you take actual expenses. Mileage is one of those things that once you choose a certain way, that's how you're supposed to go with it. So it's important for you to have maybe the starting number for the year and the ending number for the year. I recommend that. That way IRS knows that you traveled 20,000 miles, but 17,000 something was business.
Gotcha. Great. Melissa, feel free to come off of mute if I didn't quite capture what you were asking.
No, that was perfect. Thank you so
Okay.
much.
Yeah.
Excellent.
Mileage is one of those things that it's a pain in the butt for everybody. Nobody likes keeping track of it, but it's a necessary evil because the benefits outweigh, it outweighs like not tracking them. So, and usually it depends if you have like an at-home job and you have your own home office, you may not drive anywhere. But a lot of companies that, if you're in construction or you have several vehicles that are run by employees, IRS does want to keep track of that. Even if you're taking actual expenses, they want to know how many miles are put on your vehicles.
Excellent. Margie asked, are you still a bookkeeper? She'd like to set up an appointment with you.
I don't do any of the bookkeeping. I do some for some people, but I typically don't because my time is better spent as a preparer and I do a lot of more difficult returns. So they would rather have set bookkeepers for that. It just gets too much for me during tax season, doing taxes and trying to keep up with bookkeeping. But I can answer any bookkeeping questions or payroll questions.
Excellent. Amanda asked, what types of things should you keep track of for expenses if you work out of your home? Like, can you take a portion of your internet even though you would have had that at home anyways? That's a great question.
Right. So it depends on what business you are. If you're a small business and you're like a Schedule C, or you're a landlord, or you're a farmer, that type of thing, you can do business home like office expenses in your home. There's two ways to do it. You can do $5 per square foot for your office and up to 300 square feet. And then you just take a basic deduction on your tax return. There's no figuring out my internet, my CMP, my taxes. It's none of that. You don't do any of that. Or if you do want to do the actual expenses, you do have to depreciate a portion of your house. So if you sell your house, you do have to recapture that. So there is other things that you would figure out. You would need to do the square footage of the house, the square footage of the office space, and it's a percentage that of the expenses that you have, like your heat, your lights, your taxes, your insurance. You would be able to take internet, things like that, that you could take. The other thing is that sometimes if you're not taking a bunch of expenses, say you're just taking internet, that's all you want to use is the internet. If your percentage of use is like 75% of the internet is to run your business and you're online all the time doing research or ordering or sending out invoices or whatever, you are allowed to do business use percentage of internet. And I always include like the total cost of the internet, and then I write the percentage, and then I put it in like the box of like how much. So a lot of tax returns, when you're doing them, will allow you to do like a detailed statement that you can attach to the return. If you are a partnership or an S corporation or C corporation, you have to use a different method of keeping track of home office. You literally have to rent your office space to the S corporation. So you would pay, the S corporation would pay the individual return a rental cost, and that's how you would deduct it on the business side. And then on the personal side, you would take it in as rent, and then you'd do home office expenses on your personal return. So that's a way to get around the home office expenses.
Excellent. Any other questions for Alicia while we have her? You can come off of mute or put it in the chat, whichever works for you. Or send her an email afterwards. It's all open options today, but we'll just save this space for any questions.
Hi, Alicia. My name's Michael. I'm starting up a towing company located in New Jersey, and I've been buying equipment since late November last month.
Mm-hmm.
And I'm currently in the market for my first tow truck. I was seeing that all my expenses that I'm buying for the equipment, I can put it towards my 2023 expenses because the company's not making any revenue until I launch in January. Is that correct?
So what is your entity? Are you claiming as a sole proprietor, or do you have like a
I have an
entity?
LLC.
Is it just an LLC sole
Yeah,
proprietor?
single member
Yeah.
LLC.
Yeah, so that would be something that you would put on your Schedule C. You can actually delay the expenses to placing them in service. So
Yeah,
anything that you have for expenses for equipment, the question when you enter in equipment on most returns is date placed in service.
place and
So
service. Yeah.
yeah, so it's not when you buy it.
Okay.
So if you had set it with a sole proprietorship, you can't deduct a negative like expenses to a non-income return. So you have to have income in order to deduct the expenses. So that's why IRS allows you to delay it until the year that you're actually in business.
Mm-hmm.
Does that answer your question?
Yep, does. Thank you.
Okay, good. If you have like a S corporation, sometimes that will get started. IRS will require you to put that information on that year.
Okay.
Excellent. Any other questions?
And like I said too, I just want to let you know, like, if you have questions, please take down my email. You can ask me questions 6 months from now. I'll respond to you and answer it for you. I don't mind doing that at all. I'd rather be right on your return than get an audit from IRS.
Awesome. Well, thank you so much, Alicia. You've shared a lot of information, and I appreciate the offer for them to reach out to you. Feel free. And thank you all for being here today. I'll share the recording later today so you can look at it on your own time in 6 months or whenever works for you as you prepare for tax season as well. So thank you all for being here today, and I hope to see you at another workshop soon. And thank you again, Alicia. Great work.
Thank you very much.
Bye, everyone.
Bye.